No. Oh, okay, guys, we're back here into the channel. Here with Vittorio. We have a special guest here, Robert Preston here out here. First time meeting, super excited today because we're gonna talk RV parks for the first time here. Because I've been talking a lot of about mobile parks. Right now, we're gonna switch into RV parks, which I'm super excited about. We have Robert Preston here. I guess you have, I believe more than 15 parks right now you guys own. So I want to connect with you today. Thank you for being here with me.
Yeah, thanks, Vittorio. Thanks for having me on. Excited for the conversation.
So I wanted to ask you first about, a little bit of your backstory. I know that you was, you still are a Marine guy. So funny thing, because when I was reading your email, I was like, "Yo, you answer with a few words." I I was like, I bet he's some type of law enforcement guy. And lo and behold, when I went to do some research on you, I watch a bunch of your podcasts. There we go. Is him? He was a Marine guy.
Yes.
So more specific, I wanted to touch on how was your experience? I know that you did a couple of deployments in Afghanistan. I was there, and what type of things you translate and it was helpful in did you translate into RF space?
Yeah, great question. So yeah, I did about 15 years in the Marine Corps, a couple deployments to Afghanistan. My profession or job was I was a Osprey pilot. So in Afghanistan, we did a lot of missions, you know, late at night, early in the morning, raids, all this type of stuff. So the I think your question, like, hey, what's translated? It's interesting. My wife and I were talking about this just a couple of days ago about some problems that some of our friends were facing and how they were reacting to it, and the difference I think in our perspective and vice versa. So I think one of the cool things about the whole military and flying experience is that um if you've been shot at, or if you've had to do some high risk stuff, or you've been in combat and stuff, then it makes your perception of what is stressful significantly different from that point on. And so,
Yeah.
yes, running a business and investing and doing things is certainly stressful and aggravating, but it's always kind of benchmarked with, um, did you get shot at today? And so the answer is no. Kind of have a way of coping and getting through things that are maybe would be a little bit more stressful to other people who haven't had that level of experience. So I think that's a big takeaway for me. Just a different baseline of what stress is, and a different baseline of how to handle difficult situations.
Well, I can definitely imagine that. So basically, nothing phases you in in this business. Really
Yeah,
don't. Yeah,
yeah,
I can imagine. Cool, cool. So, how was your first deal? Can you touch on that first deal? Well,
yeah, sure.
just breaking up those first deal. You're getting in. You were a Marine. You get back home, and okay, you see the RV park space and what you did. How was your first
Sure.
deal?
First RV deal or first commercial
Let's
deal?
let's talk about RV deal.
Okay. Okay. So, quick backstory, I guess. My first commercial deal was actually a mobile home park.
Oh,
So we bought a mobile home park, and then fast forward about 5 years later, our first RV deal was brought to us because someone said, "Hey, we saw this park for sale. It's an RV park, but it's very similar to a mobile home park." I was like, "Well, we only buy mobile home parks." And he's like, "Yeah, you should look at it. It might, I think it still works." So they are tied together because I was buying mobile home parks and doing that type of investing. And then this deal came along and was relatively small. It was only like 36 sites. It was an RV park, 36 RVs on it, but it was predominantly, long term, pretty much run like a mobile home park. And so that was essentially our test bed of like, it's close enough. Let's give this one a try and see what happens. And so, it definitely was an RV park, but it was a little bit more on the mobile home park side, and that became our test bed. So it was 36 sites. I think we bought it for 525,000, directly from the owner who was a little bit he was an older gentleman, retirement age, looking to get out of this property and actually a couple other properties that we bought simultaneously. So we bought it and we operated it for about 2 years, and we ended up selling it for I think 1.2 million.
Wow.
So it's a really good deal for us. We didn't really have to put much into it. Just ran it better, cleaned it up, better landscaping, increased the rents a little bit over time, got rid of some antiquated um like travel agency discounts and stuff that were in place that just didn't make sense anymore. And so, changed the revenue pretty significantly and exited a couple years later.
And from there, you got addicted, I guess.
I got addicted. Yeah. So that was our first park we bought in February of 2020. Um, and then we bought two more parks in 2020. So by the end of 2020, we had three parks, and then we started selling off our apartments and mobile home parks over the next couple of years.
Oh, okay. So right now you guys own all the RV parks, basically.
Uh, we still own a few apartment complexes, but we've sold off all of our mobile home park portfolio, and we own I think 21 RV parks right now.
Oh, wow.
Yeah.
That's nice. How many sites total?
So we own, I think I said 21 parks. We also have a property management company, so we manage other people's properties. So with that combined, there's 35 locations, and we're about 4,500 sites.
Oh, wow. Wow, nice. Nice.
Yeah, it's
Then,
turned into a little bit of a business lately.
oh, I can imagine. Now, now, just out of curiosity, now that you mention it, because I was guessing that you guys had in-house program managing, but you also not only it's in-house, but also you manage others. And I think listen to one of your podcasts, you say that there's not a lot of property manager that are good at RV parks, and you touch on that briefly. So it was okay, you went out, not only you built something for you guys, but also for you offering
Yeah.
this service. Because usually when I talk to others, they only have in-house and basically they're not making money out of it, but they basically break even, but you serve the purpose for their portfolio. And you're the first that uh, that you're
Yeah.
doing for others that probably I guess you guys are profitable.
Yeah. So one, it is a difficult business. So RV park investing, operating, et cetera, is significantly more difficult than mobile park space. A lot more work, a lot more people, payroll, hospitality, because it's a hospitality business. And so that's kind of step number one, which means property management companies, it is way more difficult to do and to find a good management company. Um, so like most other people who are vertically integrated, we created the management company, the operating company, to be able to service our own properties and to be able to grow the investment portfolio. But at a certain point, we realized, hey, we've got some capacity here, and there's some economies of scale that if we start providing these services to other owners, there is a little bit of revenue to be made, but it's really kind of providing all the properties a better economies of scale and making the properties themselves run a little bit better. So I can afford higher caliber people, better software, all these things that a single or, even a five or six portfolio property couldn't understand or couldn't not understand, couldn't afford. So, um, and then it's also from an investment perspective, frankly, it's pretty good lead generation too. Um, there's there's many properties that the conversation starts with property management conversation, and then it generally leads, whether maybe sometimes in that same conversation, but if not in the future, through relationship, if someone wants to exit a property, we're a likely
You're
first
the
choice.
first. Yeah,
And you're collecting
that's
a lot of customer data. We're building a large customer database that we can use for marketing to the portfolio property. So there's a lot of benefits of bringing these multiple locations together underneath a single operating company.
oh, that's pretty smart because the biggest struggle that we do have also in our side is data. I mean, data is especially in RV parks and mobile home park space because it's not that simple like in the single family and also in the multifamily world that you can just buy a software and for maybe $100 or less you can have a list pretty detailed, but instead here you don't have those type of data and you most likely have to go manual and pull it up.
Yeah, there's not that many parks to start with, and the data's not very clear, and there's a lot of data out there, and a lot of people are trying to pull it together. So I think that is starting to happen. But you know, you have a really good point, right? In the single family world, wholesaling, flipping, ownership, etc., it's pretty much just a data business. How much data you can collect, how much content can you put out, how many leads can you generate. Um, I think even if you had all the data in the mobile home or in the RV park space, you know, that it doesn't necessarily solve the same questions you would have in a single family space.
Right, right. And that's interesting that because it's your experience translates to my next question, which is kind of debunking mobile home parks myth
Yeah.
between RV between RV park. Obviously, you own both of them, so it's gonna be what do you think is something really that mobile home parks cannot achieve instead in comparison between RV park that this thing can achieve.
Um, so is the question is, are mobile home parks better than RV parks? Can you say the
No,
question?
what do you think? What do you think is better? At least one quality. Okay, RV park is insanely better
Oh,
than the mobile park in this regard.
yeah, I think one of the big myths is um that mobile home parks and RV parks are basically the same, right? I think I've
That,
heard that myth
that's
quite.
that's funny because when I got into the space, I thought the same. They're the same thing.
Yeah,
That's super. That's funny
they are
that you mentioned that.
they are not. And then I think on the flip side, I've also heard the comparison. Well, RV parks are just like hotels, and they're also not just like hotels. There's also a big difference between that. So there's a lot of myths out there. Occupancy, I would narrow on specifically to occupancy. Um, the idea that if a mobile home park, that market is at 90-95% occupancy, that your RV park will also be at that occupancy. That's a big myth, and that's caused a lot of people to make really big mistakes from an investment perspective. Occupancy in an RV park is typically significantly less, even for a very well-run park, because you have higher turnover, right? And so you're going to always have days or months that there are sites vacant, whereas in a mobile home park, right, you have the homes in there, they're much stable. So, um, I yeah, there's a lot of big differences to the process, but occupancy is one of those areas that I see from an underwriting perspective. Sellers or brokers or even people buying them, really overestimating occupancy, even on a long-term RV park.
That's interesting. That uh, hmm, that's really a good other thing. So right now, what you guys are buying? What markets are you in?
Yeah. So from a management perspective, we're across the U.S. So all the way to California, back to Florida. We're up in Minnesota and Iowa, you know, all over the place. So management wise, pretty much anywhere that the property can support, the revenue can support, you know, um, the services and payroll. From an acquisition on the ownership side, we typically like the Southeast. Um, and if I had to draw a picture or a box on the US, it's like Interstate I-10 to Interstate I-40 and kind of, Texas backwards. So we've got some properties in Texas. So I've owned properties in Arizona. I like that market, but predominantly the South, the Sun Belt, what we called, and specifically the Southeast is our main market. We are looking for properties that are relatively close to interstates, um, and close to interstates, interstate exits that have a water feature, some type of pond or stream or lake or river. Sometimes it's just a really nice big pool. That works too. So that's our main criteria.
Any minimum sites you, because I think I remember you guys are looking for 100 plus sites, but I guess it really depends on the
Yeah.
market, right?
Depends on the market a little bit. It's really more of a revenue thing that usually equates to about 100, 150 sites, but it's really more about a revenue. I've found it's difficult to run properties well as a portfolio and as a management company if the revenue is less than 750,000 per year. Um, so we're looking for parks that have
Gross,
gross.
right? Yeah.
Yeah. Yeah, gross revenue. A lot of times there'll be a lot of parks we look at have gross revenues that are good, but their expenses are way out of control. Well, we can come in and fix that. But yeah, gross revenue, you know. So that's that's uh that's our buy box. Gross revenue about 750 or more in the southeast.
So what's your expense ratio, uh, your medium around your portfolio? 30, 40%, if I have to
Uh
guess.
it's gonna be a good bit more. And I think that's another back to the previous question, mobile home versus RV.
Okay.
Uh, another myth slash error that you would run an RV park just the same on the same expense ratio, right? So mobile home parks probably 35, 40% expense ratio thereabouts. Um, most RV parks, are at least 50% expense ratio. Some of the more higher end that have a lot of hospitality, a lot of resort level amenities and all that type of stuff, those could be pushing 65 to 70% expenses.
Oh,
So
wow.
it's a much higher expense ratio, simply due to the hospitality part of it, and that's where they are closer to a hotel in its expense ratio, but different in a hotel's occupancy and ADR. So you kind of take piecemeal. So we're probably are running expense ratios closer to a hotel hospitality business, than we are, mobile home or multifamily.
Got it. And let's say we find something or someone that is listening to, okay, has something into the Sunbelt,
Hmm.
let's say in that revenue bracket. What is a deal killer for you guys? Okay, you know what? No, we won't touch, even if it's on one of your
Uh,
markets.
I'm a pretty aggressive deal maker, so that list is pretty small. Infrastructure sometimes can be deal killers, particularly in the septic side of it, the sewer and septic
Oh,
system.
okay.
Yeah. Depending on how old that system is, how bad it is, that could be a deal killer. You know, if the uh, if the surrounding area is not great, I can fix things on a property, but I can't fix an area. So I can't fix my neighbors. So that could potentially be a deal killer. And then there's also a component we we're going to value the properties on two ways. One, cap rate, income valuation, use the cap rate, etc. And then I'm also going to use a cost per site, right? How much we paying per site here, and that's going to be benchmarked to replacement value. How much could I build it for myself, and vice versa. Because if you think about it from a income valuation cap rate perspective, there's a range that makes sense. From here to here, it's a cap rate, etc. But certainly if there's no NOI, it's not being run very well.
Wow.
I don't get to buy it for free, right? There's a certain intrinsic value per site that this property is worth. It's a lot less. And then on the flip side too, just because the cap rate says, it's worth X dollars, I'm not willing to pay $100,000 per site for something with dirt roads, and there's no intrinsic value there too. So I think for me, I use the cost per site valuation as the guardrails, and then if the NOI and cap rate fall inside of that, I'm probably using the cap rate for valuation. If the cap, you know, if the NOI and cap rate valuation are extremes on either end, then I'm going to probably look at it at a more of a intrinsic value cost per site perspective.
Got it. What would be the medium cost per site? Okay, this one I'm gonna look at it because it's in my parameter. Like
Yeah,
let's
that's
say because let's say I know I was talking to a guy that is buying mobile parks, but he was saying to me, okay, if I know I have 30,000 for mobile park, I mean, I gotta look at it because I know that we are that ballpark that it feels like a good deal.
yeah. Most parks are going to fall somewhere between like 30 to 50,000 per site. You
Got
know,
it.
bought some in the teens for sure, in the 20s for sure, a couple in the 60s, but most parks generally fall in between 30 to 50.
Got it. Because I thought we talked to a lot of owners and they always start around 100K per site. So
Yeah, they're
I mean, I guess that's the expectation. I mean, they won't get it, but maybe right now that's the market. I
there
feel.
there was a time where some properties were selling for that, and prices were being pushed up and approaching that. But that's when I go back to, um, there's a lot of people who made some pretty significant investment mistakes during that time period and drastically overpaid for parks, um, in you know
Oh,
in the range of quarter
now
billion
that you
dollars.
mentioned you just mentioned mistakes. And do we have a higher default rate in their RV park space instead of mobile home? Because I know that mobile home parks default rate is pretty much zero, but but I mean there's not a lot of story of defaults on mobile parts. I guess there's a lot of default in the RV space.
Yes, they're starting to be. These loans are starting to
Mm,
mature. Having 2021. Um, there are distressed properties. I don't know if they're going to full default. There are ones that, the loans are being modified or the debt covenant ratios are not being met, and the owners are having to do some principal pay downs. I think that's happening. There are a few, of course, that are being defaulted and going back to the lender. We bought a decent number last year that were in
mm.
that position. So yeah, there's a good amount of opportunity right now on the distressed financial side in the industry.
And do you see all more coming?
Mhm. I think so.
Mm,
Yeah, that's actually one of our things that we're um, launching here shortly is essentially an investment fund dedicated to bailing out properties in distress. So we will we will launch that here shortly. We'll begin to raise capital, and then the main thesis there is that we step into situations just before they go into default and take over the operations on the management company side, and then provide that capital that's needed to shore up the investment itself, preserve it, run it, operate it, and bring it back to where it should be.
wow, wow, that's awesome. And as for value add, I know that you touch a little bit on the managing side, better managing and stuff, but what you think? Uh, what are the top three thing? Okay, you go in day one, I'm gonna change it this, and we're gonna do maybe plus 10, 15, 20% of our NOI in
Yeah.
maybe year one.
Yeah. So again, that's a always kind of depends on the situation, but you mentioned the top three things. There's actually three things that we think are really important. It's that the properties are safe, that they're clean, and that they're friendly. And so those are the top three things to start with. If the property isn't any of those things or needs work, that's first and foremost what we have to do. And sometimes that means you're doing nothing but training staff and operations. But sometimes, that might mean actual capital improvements, et cetera, to make things clean or safe or friendly, right? Renovating bathrooms or fixing dilapidated decks and all types of stuff there. So that clean, safe, or safe, clean, and friendly is really, really important to our brand and really important to our guests. And when we do those, you have the foundation to build up the other things. So with that in place, then you start to look at, better marketing activities, better technology, sales training for the staff. Um, and then, usually we're always looking to see if there's a way to add sites or improve the sites themselves. Um, so there's nothing like super magical about what we do. It's just come in, make it safe, clean, and friendly, and make it run well.
And then what about heavier capex type of thing? What do you think is going to be the top three as far heavier capital?
Yeah, heavy capex stuff, bathrooms, um,
Bathrooms,
either
okay.
new bathrooms or renovating them, pool decks and amenities. If there's not a pool, you know, building a pool potentially, but if there is a pool, redoing the decking and the furniture and making the deck, making it feel nicer than just a couple old lawn chairs sitting there on a chain link fence. Um, those are usually major capex, and then if we can add cabins, we're always looking at that. If we can,
Okay.
add some glamping cabins, something other than RV sites is always an interesting discussion and thought as we look at each individual property.
Got him. And what about paving roads? Because I know it's big in mobile park, but I don't know, maybe in RV parks it's a little bit less.
It depends, depends on the area. So sometimes paving a road would actually be a negative. It
Oh,
may
okay.
it, it might lose if the park has a campground feel, has a
Okay.
lot of trees
Yeah.
and shade and it's got good rock roads. I mean, you need to have some type of road. Just plain dirt road is not good. But if you could very well ruin a park by coming in and paving it and having all that heat, having the smell, the look, and losing the feel of it. So there's some parks I think that could be a mistake. And then of course there's other parks that have old asphalt roads that need to be cleaned up and it would make it look excuse me, make it look and feel much better. So um pads, getting pads leveler, making them larger, making them more level, putting a concrete, picnic table area, patio is those are always generally good things to do. But the roads kind of sort of depends on what you're working with.
Got it. Got it. And you touched briefly on the infrastructure. You said, okay, uh, there's some septic that you want to touch. What about water waste treatment, lagoons, all those
Yeah.
private utilities that looks like, I mean, they said that they're nightmares. Are you guys navigate those?
Yeah, we have a couple lagoon systems and stuff. It's not ideal, but if they're kept up, they really haven't caused much problems. Preference is still city sewer, city water. That's the preference, but we have a lot of parks on septic systems. We have just a couple on the well systems. I mean, frankly, I think I'm more concerned about the water systems than I am
Um,
the septic systems because septic systems can certainly be a huge liability from a cost perspective and headache. Um, and if they're not working, of course, your park can be shut down. That's really bad. But there's a few stories recently, and you're seeing it more and more, where there's a much larger legal liability and risk on the water side, because if something contamination or something were to happen
mm,
and people drink it and get sick or even worse, that's a far bigger problem than fixing a packaging plant or spending money on the system. So I think almost. I don't think we only have one or two properties that's on a well, but everything's on city water, and I think that's an important criteria because it just de-risk a lot of the potential like liability, that could happen down the road of someone getting really sick.
Yeah. Wow. So, but at the same time, I'm imagining you guys are dealing more with transient people, so no long-term stuff. Or do you also guys have a long-term tenant on your parks?
Yeah. So for us, long term is anyone staying monthly, on a monthly rate. That's our definition of long term. We don't have any leases. We don't have any like annual leases per se. So a long term tenant for us is anyone who's staying, longer than a month. Um, with that defined, yeah, we actually there's a good part of our business that caters and drives to a monthly tenant or a monthly. We would call them guests. We never call them tenants. A monthly guest. Some of our parks are have a very high percentage of it are monthly, and some of them are have just a little small component, and the rest is retail vacationers. So, and that ratio changes a little bit from season to season and park to park, but all of our parks have some type of component of monthly guests.
Got it. So the monthly guests, they do stay inside the park also out of season. I guess you guys have park that shut down during low season, maybe, or
Yeah,
they do stay. You guys allowed to them to stay also during the low season, I guess.
we only have we only have two parks that actually close during the winter, so
Okay.
they're completely shut down, so they cannot stay there. But everything else is that we have is open all year round, and so yeah, they could stay 12 months if they liked.
Okay. Because I remember you were touching on another podcast on the weather, the weather side of things that you guys are always studying data on the weather to have it open all around. So I guess that's why you guys only have two that are completely shut down and
Yep.
doing a winter.
And the one we have two that completely shut down. One is because of the weather, the infrastructure is not there in place, and the other one is because it's on a lake, and the Corps of Engineers requires us to be shut down a few months out of the year. So that one's entirely seasonal and transient. Um, the parks that are up north, we're spending the money and infrastructure. Back to your capex question, to upgrade the water systems and sewer systems so that they can be open all year, right? Even though it's cold, we're upgrading those water systems and stuff so that they can be open all year.
Okay, so I guess also maybe right now also it's a deal killer if you have some type of rules that that make it for your work to be closed during maybe sometime maybe that would
Yeah,
be some deal killer right now.
it does make it pretty difficult. Yeah, we'd have to make sure that there's some type of you know, good mitigation of that risk. Um, Seasonal properties, you have to make all your money in a set period of time, and if something happens in that set period of time, you're out of revenue for an entire year, and that's a pretty big risk.
Got it. Um, as for expansion or development, I want to ask you first, as for regulation, it is more difficult or it's easier to develop or either one expand it for you, the current, and also two, maybe you can
Yeah.
get a new raw land and just develop a new park like back in the days with all these owners that have started their park.
Yeah, it's certainly usually a lot easier to expand a park than it is to build one from raw land, and it's pretty difficult to build one from raw land. So, in my experience, that most cities and counties uh and neighbors put up a big fight. They don't like new developments, and so they tend to um they tend to push they tend to fight back on a lot of things. So uh, new development I think is difficult.
And what about expansion? Because this owner, one thing that we they hear a lot, hey, you can add 20 more pads, you can add a 50 more pads, you can add 100 more sites, and that will be that will be super for your part. So we're asking like an extra 500K for it. So on your experience, I guess you guys are planning to pretty much develop or expand in all part some of your parks. I guess so you guys already did. So how do you touch on that? How do you plan on that? To just and
Yeah.
one and also you do you consider it in your pro forma or it's just is a cherry on top? Okay.
Usually, usually it's just a cherry on top. Most people who think that they have extra land that they can develop on is generally, to be blunt, a nice idea, right? Usually there's a lot more work and effort and things that have to go into that for that to actually be true. So most of the time I put very little value on that idea. If that idea comes with a development order, plans, engineering, permitting, etc., then it has some value. But I probably 3 times a week someone comes to me and says, "Oh, I've got a beautiful piece of land. It's going to be a great place for an RV park." Like, no, you have a cow pasture, and it's worth what a cow pasture is worth until you have it developed and ready to go. If I can bring a bulldozer in tomorrow, then it's ready to build. If the answer is no, then to me, it's just a nice idea that you have, and has very little value.
Mm, no, that's,
That was pretty direct, huh?
yeah, there it is. And any expansion that you guys already did on one of your
Yeah.
parks?
Yeah, and and we have experience here. We just are finishing a brand new park that was raw land. So I know from experience, the difference we face through there. We're expanding another park by 33 sites. We have another large expansion on our property going. We're trying to finish a development on a park that's um it's we're adding like 210 sites. So
Ooh,
yeah,
that's
there's
a
some
huge development.
there's some big projects there, and they take a long time, and they're a lot of headache.
Yeah, I can imagine. So then let's talk about money. You guys investor, I guess. I wanted to see as far, let's say a lender or someone that wants to invest on one of you guys' project.
Yeah,
What type of PMLs are you guys looking for at this moment? Because I have people that are looking for immediate monthly income, pretty much monthly or quarterly or whatever. Or there's
yeah,
people that looks for the long game and okay, they're in there for the tax benefits
yeah,
and for the equity. So they do
yeah,
not really need those monthly check.
yeah.
So
Great question. 'Cause
mhm.
those are two different types of investors. We generally most of for me, most of the our investments and stuff we put together, I am my strategy is to build the most value, right? Not to necessarily have the most cash flow, the most distributions, although those are good and the properties produce those. But I guess you would put us in the more of that longer term category, depreciation, building, appreciation, capital returns, making the best investment for the property over the long run, vice, um, monthly check. So that's generally the category we fit in. Um, yeah,
Love it. Love it. So you guys are attracting those type of people here for the
yeah,
long run.
yeah. We got
So
a lot of people who are high net worth earners. They need the tax benefits are pretty significant in RV parks. There's a lot of depreciation, cost seg studies, et cetera. So that's a nice part of it for the first couple of years, and then we're building a lot of equity into these properties as we buy them and turn them around and exit them, and usually around 5 years. 5 years is roughly the mark that we look for.
got it. So I guess working for with those type of investor, I guess also capital raising is easier.
I hope so.
I mean,
Um,
what's your experience? Let's say you guys have a new project. It's gonna be, do you have to do calls or whatever, or it's gonna be you have maybe a or a found or syndication already that it's really
yeah.
easy to.
So we raised our capital for our own fund a couple years ago, and we just finished deploying that. So I haven't raised that much capital lately. I'm getting ready to, and we're getting to start doing that. So um, I haven't had to too often, which is good, but we're getting ready to. So yeah, I mean, typically we'll send out some emails and do some webinars and stuff, and get a pretty good response pretty quickly, and then we're always looking to find new relationships and build from there. But um, yeah, we haven't had to raise capital in quite a while, so we're getting ready to soon.
Yeah, definitely. So we are ending toward the ends of the podcast. So I'm gonna ask you what we assignment fees people, what annoys you the most of us? Okay, this guy is annoying till I don't want to work with this guy anymore.
That's a
So, again,
that
this
might
guy
be
again.
that might be the best question ever asked on a podcast. Um, that's a good question. I think for me, the annoying part is when I don't expect everyone to know everything. That's fine, and I don't know everything either. But when a wholesaler, has like all these really strong feelings about what a deal should be, and and they're making all these assumptions that are wrong about the industry and stuff, and then you point it out to them, and they kind of, I would say, get combative or try to get argumentative or say, well, I just did this and I sold this, like that's, it's like I'm just telling you what the data shows and what the experience shows, and you can take it or leave it. So I think that's pretty annoying. One, to not know your numbers, but two, to argue, something that's just completely false. Just take the information and say, okay, that makes sense. Let me go see if I can rework it with the seller.
Got it. Well, so, and also let's talk into the most extreme. Okay, I do. Let's say what's really the okay. I don't want to work with this guy anymore. Like something that's gonna really or bad the relationship, no matter the type of deal, no
Yeah,
matter.
yeah. Arrogance. That's probably really, yeah, just arrogance. I
Mhm.
don't care how good your deal is. You might have a great deal, but if you're just a pain or a jerk to work with, life's too short to deal with people you don't want to work with.
Yeah, yeah, I do agree. But to be honest, my experience when I transitioned briefly, also just keep in mind I've never been to the state, but my when I transitioned to having conversation with a mobile park and RV park investor, I feel like everyone here is nice. I mean,
Yeah,
brokers are nice, investors are nice,
I agree.
wholesaler are nice. Everyone is super nice, super helpful, super. I mean, just good people. Wow, what's going on in this space?
Yeah, I know. I totally agree. That's why I love being in this space full of really great people. So if you're not one of those people, you stand out like a sore thumb, and
Mm,
no one's going to deal with you or work with you because we kind of want to protect the culture in general of having good people.
oh wow. And why do you think that? Why do you think that this particular space just such a good oh I mean obviously I'm quote unquote outsider that I'm trying to get in, but that's that's amazing. I mean, that outstanding. So all good people after good
Yeah.
people, super helpful. I mean, I'm gonna have with I'm having a conversation with you. I mean, you're super successful guy. I'm gonna meet other super successful. What do you think that this space attract? I don't know. I just want to, out of curiosity, what do you think that's the reason why? Uh,
Um, I think that um, I think that most people don't take themselves too serious. It's not like we're just trying to run campgrounds and make people happy and do those fun things, you know. And it's camping, right? We're just gonna go outside, do fun stuff. So yeah, it's a real business and there's real money and there's real parts and pieces in it, but I just think we don't take ourselves too serious most of the time, and so
Mm, okay, that's interesting. And as for future plan, future, you touch a little bit on the distress, distress slash foreclosure side of RV parks that you guys are trying to get in. What are the future one of RV, the RV space in general? What do you think it's gonna be if you have to make a prediction, a random prediction, whatever it is that you think in the next 5 years for the space, especially first also I'm thinking also in an institutional because I feel like I mean, I feel maybe I'm completely wrong, but there's not much institutional money like in the mobile home space, uh, in the RV space. And what do you think it's a full future like in this space for as far as institutional type of thing? You're muted if you're talking to me.
yeah. In general, I think more institutions will come in. It will continue to consolidate, but I don't think it will happen as fast as everyone thinks it will, and I don't think that it will probably ever get to the level of mobile home spaces. So back to the myth question or what's different, a lot of people will say, "Hey, well, RV parks are the next mobile home parks.
Mm.
They're going to follow the same path, and all this money's going to come in. It's going to get consolidated down to there. That will happen, but slower, and I don't think it ever gets to the same level, just because of the complexity of the properties, the complexity of the management and the operations. It's really hard to standardize everything. You can standardize a lot of things, but the delta between a mobile home community and an RV park community in the level that you can standardize and operationalize, I guess, or institutionalize, there's just a big delta. There's a big gap there that exists.
Okay, got him, got him. And as for you, project in the future, maybe you are promoting something that is coming. What you guys see? What's
Yeah.
going on for you?
Biggest thing for us is that rescue capital fund. Um, I think that's our next big project, and then that will buy more and more properties through that fund and take over operations. So that's the big emphasis for this year is launching that second fund for us and really focusing in on the distressed properties.
Okay. And right now, where people can find you as far
Yeah,
maybe contact where people if you want to send you deals or if we want
yeah,
to invest in your fund, where
yeah. Great
where do people
question.
find you?
I'm on LinkedIn. I'm sure we can leave a link to that. Climb Capital is the investment
Okay.
company. So that's climbcapital.com. And then unhitchedrv.com is the brand for the RV parks. So my email for either one of those, Robert at climbcapital.com or Robert at unhitchedrv.com.
Okay, Robert, thank you so much for taking the time to be with me today. I hope you the best of all of you. I'm pretty much sure that we're gonna make some money together, so I'm really excited
Love it.
for that. So thank you so much for bearing with me with annoying guy from Italy.
You did great. Well, I look forward to working with you, and I love the idea of making money together. That's great.
Thank you so much. Thank you for your time. Thank you,
See ya.
everyone.